Hi everyone, and welcome to the QuickBooks Virtual Conference. This session is Identify Opportunities and Clients to Start Value Pricing. My name is Hector Garcia. I'm a CPA practicing from the Miami, Florida area, and I'm the CVO, the Chief Value Officer of my business. I'm also the co-host of QB Power Hour, another webinar series all about QuickBooks. And there's my email on the screen. I'm pretty accessible via email, so if you have any questions, I will gladly answer them. You will get 1 hour of CPE during this presentation. You must stay logged in for the entire duration of the presentation, and you must answer all of the polling questions. We will have at least 3 polling questions during the session, and you must answer all 3. You will get your CPE certificates emailed to you within 7 business days. Learning objectives will understand what clients want from their accountant. Learn the important conversation topics to discuss with your client to determine what is it that they value the most. And learn how pricing options will increase the probability of adding value to your customers and acquiring or closing that new client. We'll talk about these topics in 4 sections. We'll do a quick recap of value pricing as a concept and pricing on purpose, which was Ron Baker's previous presentation about 20-30 minutes ago. It just ended. We'll talk about the transition to value pricing. We'll talk about transitioning some existing clients versus new clients and how that's different. We'll discuss some value conversation tips. What are the questions to ask that allow you to discover value and also uncover value and understand what the value is. And lastly, we'll talk about developing and presenting options. Now, let's start with the first polling question. And while the polling question it's going to be up for about 2 minutes. I would like to briefly talk to you about what my goal is as a presenter for this session. Now, the slides we provided, they contain roughly about 2 hours worth of a presentation if we were to cover every single slide and talk about every single point that is there. So we made the slides a little bit heftier, a little bit beefier than the actual topics that will be covered during the presentation. So just make sure that, don't freak out when we skip through a slide or two and we're not talking about it. That is there just to add more value or to give you more resources. So it would feel it will go pretty quick just because there's a lot of information to cover, but it's timed in such a way that we'll be able to deliver the entire thing within that hour. So that's just a really important point to keep in mind there. The other one is one of the very last slides, the resources section. I have a couple of links, a couple of resources, such as other videos that I've done on the subject matter, some articles, some interesting places you can go and read a little bit more about it, because I would love for you to not only get the information from here, but be able to have some actionable steps that you can research a little bit more later on after the presentation. Okay, so the polling question is almost done, and we're gonna go ahead and get on with the next slide. I'll give you an idea. The most of you are somewhere in the middle in terms of how the comfort level with your topic. So what I really want to do is somehow change that and make you really, really comfortable with this topic. So a quick recap of value pricing and pricing on purpose. So if you were on the last session, you learned from Ron the reasons why value pricing is more important to your customer, and also the reasons why it is more important to the accountant or the accounting firm. We also talked about Ron's laws of pricing, and it's extremely important to keep those things in mind forever. Like, this is the one statement that will mark you forever in your journey to value pricing, which is value is subjective and prices are contextual. So what that means is you, as the accounting professional, will never, ever, ever, ever know how much your customer values your work. You will never know it. But what you will know is whether they paid for it or not. So we know they value it at least what they paid for, or possibly a little bit more, if you left some money on the table. Now, prices are contextual is the other piece of that learning, which is really, really important that to understand that a price by itself doesn't mean much unless it's compared to something else. So comparing it to the last price they paid compared to one of the other options, which we'll deep dive about, and that sort of thing. And we also talked about Ron talked about some of the anchoring and framing effects of pricing. The way you package it, when you present it, how you present it, all that stuff matters. And Ron spoke about the 8 steps to value pricing, which the first half is all about understanding what the client wants, being able to get close to knowing what the value is so you can price it based on their needs, developing the options and presenting them. That's sort of the first half of the 8 steps. And then the second half has to do with doing the ongoing work, getting those fixed price agreements, changing the price year over year if the scope changes, dealing with scope creep, scope changes, and learning from your experience. So what this presentation will do is deep dive into the first half, which is having that value conversation and understanding how is it that customers determine value. So the first real overarching theme here over having a value conversation, this is something that you need to kind of read in your head out loud before you start and say, okay, it is really important that at the end of the conversation, I walk out with these 4 high-level questions answered. Number 1 is why me? So why is the customer specifically talking to me? Why is the customer interested in working with me or my firm? Why is the customer attracted to me or my firm? So there could be numerous reasons: referral, reputation, numerous reasons. You want to make sure that you have the overall answer to that question. Why this? This is what the customer is asking you to do. Like, why are you asking me to do this? Is this really solving the problem? So you want to deep dive into the whys. Is there a reason why you are asking for this solution, or is there a reason why you're seeking out a solution to a problem? Then we have why now. They could have changed accountants a month ago, a year ago, 2 years ago. They can do it next year. Why are they approaching you now? Why are they asking for you to work with them now? Is there an immediate need? Is there a deadline? Did something just happen recently that triggered this? So you want to ask enough why so you get that answer. And the last one is, and this one you may not necessarily have to ask it, but you definitely want to get the answer from it, which is why not? So what happens if you don't work with them? What happens if they don't hire you? What happens if you are not there to solve the problem? What are the implications, financial, psychological, all those things of you not being there to answer that question or solve that problem? And this is something I learned from Kirk Bowman and Dan Morris from the Various Age Institute. So I thought that was extremely insightful. Now, let's find out what's the best way, or in my opinion, what's the best way to approach value pricing with an existing client or with your existing client base. So we're making the assumption that we have a client base and we're charging them by the hour now. So even though you're charging by the hour, it is possible that you may have customers that are not profitable. Now, conceptually speaking, if you're charging by the hour and that hourly rate is something that you are comfortable with, you could still have a customer that's not profitable because maybe they do take more resources that you can't bill for, or they take some emotional strain, or they're inherently stressful, or they're inherently problematic, or they don't pay on time. I mean, there could be many reasons that we deem a customer non-profitable or low profitable, even if we're charging by the hour. So we want to work with those. And the reason we want to start with those is because we need to be okay with accepting the fact that we will lose clients in this process. Like it is okay for us to take 2 or 3 clients that are, let's say, they still make us some money, but they're not as profitable, for us to come in and say, you know what, we have made a decision, we're making this transition, and we're definitely going to have to, change to this new pricing model. So you want to start with that. And if the client says no, what you don't want to do, or my suggestion is that you don't want to retract from this. In other words, if you if you changed your mind about going from hourly to fixed fee, don't give your client the option, because if you go and present something and they say, no, I'm happy with the hourly rate, then you're not really achieving much. You have to nudge them, or you have to move them into this no matter what. So once you made that decision to move to value pricing, or move your client to value pricing, that's it. So you have to learn to accept the fact that you could lose them, and this is a take it or leave it situation. Now, you can't just change a client from hourly to fixed fee without making a substantial change on your service. You either have to change the scope, or what I call the core service. We have to change the risk transference effect, which means, what new risks am I taking, or what risks am I passing down to the customer. And also we may need to change whatever the guarantee is, or whatever the promised or guarantee results are, and we'll deep dive into those. And then after we have that conversation and we discover all that, and we present the new options with all those changes, we need to communicate them, what I call, both in writing and in person. Now, in person doesn't mean we have to physically be next to them. It could be a phone conversation, it can be a web face-to-face type of conference, but we want to have both the written element of the new proposed change and also give that face time, because there's a lot of anxiety for customers getting a price change from the service providers, especially if the price change from the service provider, it is perceived to be higher than what they're paying now. And in most cases, if you actually watched Ron Baker's presentation, it is likely that you are going to increase the price. Now, you may deliver the value, and it may still be a valuable option for your client, but you may, no matter what, change the overall price to the customer. So we want to look into the current scope of the core service. What exactly are we doing, and who is the user of the third-party financial statements? For so long, I've been practicing for 10 years. For so long, I didn't pay attention to finding out up front who's using these financial statements, because we know that the user of the financial statements influences how the customer behaves around them. So if the user of these financial statements is strictly the IRS, then the customer may be 100% focused on mitigating tax. But if the user is, let's say, one of the partners or a new potential partner, maybe the focus is around having clarity or making sure that not a whole bunch of personal expenses are there. Or if the user is a bank, then we want to make sure that our profitability is clearly shown, and the potential and all that stuff that people extrapolate from the financial statements, it could play an influence on how the customers behave around those financial statements. So as long as we understand that right off the bat, that may trigger a scope change or a core service change. The other option that may seem a little bit obvious is, are we doing cash basis? Are we doing accrual basis? Does a client even understand what accrual basis means? Sometimes as accounting professionals, we're gung-ho about doing the accrual basis work, which is the detail work, and the client doesn't even value that. So that could be an opportunity for a scope change. And how the firm will do it only matters if the client sees the process. So what you do on the back end typically is something that the customer doesn't care. So telling the customer that, oh, I'm going to add this app, I'm going to do this differently, and therefore I'm going to change your price, matters very little to them. So you may need to only worry about the how in terms of how the firm does the work, only if it's client facing. Now, what responsibility will the client take, or what will the client do? Will they collaborate? And that could be a double-edged sword, because sometimes collaboration is even worse in some cases. How much access will the client have to add, edit, view, delete the transactions? Are they requiring ongoing support beyond the deliverable? So all those things are important in terms of understanding the scope. Now, again, these are questions that you're having during the value conversation with your client to determine what changes we have to provide in order for us to then turn around and deliver a fixed fee. Now, risk transference talks about what number of risks is the firm taking by taking the client. So are we taking over deadlines? Are we mitigating a risk for a customer? Like, are we lowering the customer's risk, which in terms can lower their insurance costs and it can increase their profitability? What tail end responsibilities does the firm have post engagement? I have spoken to, I would say, probably at least 30 colleagues, and I've asked them about this question. And most of them are like, I don't even know how to approach this. Tail end responsibilities is when we're done with this client, we divest the client fires us, whatever it happens to be. Are we still on the hook for something 2-3 years later, maybe during an audit? And that's really important piece, because if we're undertaking tail end responsibilities, we have to build enough pricing in there, because there's a lot of value on the customer feeling that even though they pay you for the tax return 3 years later, there's an IRS audit, you're still there to represent them. And that's a really important point. Now, you need to find out or ask, what if external factors can affect my firm's capacity to do the work, right? So if the customer waits for some external factor to get information, that's going to delay us, right? Which is going to make us less effective. Are there other environmental factors that can affect their work? Maybe something with the industry, restrictions, things of that nature. When you work with doctors, for example, and you're trying to reconcile some sort of patient AR account, and they can't give you the patient information, or they have to hide it or work the report so you don't see it, then that's going to really delay the process. That's just an example. You want to ask that stuff up front. Now, who's responsible for correcting client-created errors? That's really important. Clients create errors. Are we taking the responsibility, or are we going to charge separate if we're going to take that responsibility? And then the other major change in scope that you work with current clients, it's what about the results or the guarantee? So we want to ask the client this question. Hey, are you looking for an engagement in which we have narrowly defined, objective, measurable results? Or are you looking for something broad and dynamic, and if it looks and smells like accounting, we should take care of it? And you need the client to be able to tell you that, because when they say, no, we want something broad, dynamic, because I want you to just take care of it when it comes up, there's a lot of value there. The client's actually telling you they're willing to pay more. Or maybe they don't know they're supposed to pay more, and that's where you put your foot down and say, no, you're going to pay this really high price to get this sort of engagement, or we're going to write down exactly what we're going to do and what we're not going to do. So that's a really important piece. Now, what specific results is the firm guaranteeing? Are they guaranteeing a number of some sort, right? That's a really important piece. If there's an audit, internal audit, government, financial, third party, whatever, is the firm guaranteeing any accuracy, any margin of error? All that stuff is really important to put in place. Now, will the firm refund the client 100% or partial if the results are not achieved? That's called the money back guarantee. So if you put a money back guarantee in your engagement, and the client wants that, if the client values that, then that's totally okay. Just making sure that you have enough, your price reflects that. Now, Ron talked about the options: tailoring, talent, technology, terms, timing, and transference. I won't get into too much detail on them. Check out the slides. These are the things that essentially affect how you offer a service or how you price a service afterwards. So things like, how much do we have to redesign or readapt our way of working for it to work with you? Do we have to log into your server? Do we have to log in to your, to your own portals, that sort of thing? Talent, is there a specific person within the firm that's going to do the work, supervise the work, or be available to answer questions during the work? Is there a particular person to be assigned as a third-party contact person or accounting contact? That's extremely valuable. If the client wants to go out there and say, my accountant is Hector Garcia, they need to be able to pay more to just have the capacity to say that. And you could serve as an accountant providing a service to a client, and you're not obligated to have to answer anyone's questions about your accounting or your process to any third parties. You can actually charge more for having the option saying, yeah, absolutely, I want to be able to list you as my third-party accounting person that will answer any questions to a third party when it comes up, a loan, whatever. Technology is a really important option. Are we going desktop? Are we going online? Are we using cloud-based? Are we remoting into our clients' computers? Are we getting an accountant's copy? Are our clients working with low-tech banks that make it very difficult for us to access checks, deposits? Or are they working with bank feed-friendly banks that contain a lot of information, that sort of thing? So all these technology aspects affect the pricing. Now, what about terms? Are they paying cash, credit card? Are they paying upfront? Are they prepaying a whole year? Are they paying in arrears? Are we charging a late fee for non-payment? I mean, that is an option, believe it or not. Are we giving them the option to for forbearance? I actually had a client that that told me the reason why they left their accountant. I mean, it's one of those interesting things. The reason that the accountant is because they paid 1 month late and they stopped doing the service, and the accountant was so cold and calculated that they couldn't understand that they went to a really rough patch after 3 years of being a great customer, and that was the reason why they left them. So when you start discovering things like what's important to you, and this could be part of your options. If your client wants for you to put in the contract that you will continue the service even if there's non-payment for 2-3 months, whatever, you can actually increase the rate on that because you're taking a risk. Timing things like, when will I do the work? By when will I do the work? During what time I will do the work? Do I have to work nights and weekends because I don't want to interrupt our clients' work? All that stuff is really, really important in terms of pricing. Again, we want to discover all these things. These are all these questions we're asking our clients for them to come up with a price. Now, what about knowledge transference, right? Does the client require us to educate them? Is this a client in which every single time we give them a financial statement, we have to handhold them to every single line, explain what happened and how? And by the way, that is the value that accountants give. The most valuable thing we can do is that translate or curate this information into actionable steps for our clients. But there are clients that don't need that. There are clients that are happy with your cash basis financial statement that they need for their books and to stay compliant, and they don't ask any questions, and they don't need any additional support in that end. And there are clients that require all that hand holding. And those two clients could have the same number of bank accounts, they could be the same industry, same number of transactions, but the one that requires more hand holding will pay more. And that's an important piece. Is there going to be knowledge transference across during the engagement? And for me, I'm an educator, I'm an accountant, I'm both things at the same time. And for me, when a client asks me a question, I feel obligated to give the long answer. I want to give the whole explanation with all the possible variations of that answer. What circumstances can change, the variance that can change that answer, and that takes a long time. And I have to detect up front if that's a client that's going to take more of my resource, and those clients need to be able to pay more. So let me run the next polling question, polling question number 2, and that's going to be up for about 2 minutes. So please go ahead and answer that. And while the polling question is up, I'm going to go ahead and answer some of the questions that are on the questions box here. One of them is pertaining to those 7 options, timing, terms, technology, talent. Do you present them as such? Like, do you actually write down timing and what the timing is, and transference and what the transference is? So the answer is you could do that, but you're not necessarily required to do that. However, I personally do it. Like towards the end, I'm going to show you a little sheet that I created where I actually have all those 7 options on the scope option in the top, and I use that box to write down my notes of that engagement. That gives me pretty much a starting point that allows me to figure out how I'm going to price it. So it's just kind of like my own guide on how I do it, or maybe the prep work that I do that after I have my value conversation I have recorded all the information, all the possible information about what the clients need or want. Okay, so let's see. Somebody else asking, how much late charges can we do? I mean, I don't know in terms of accounting rules, but as a business, you can charge whatever late charge you want. There's no restrictions on that. But you can actually build into your pricing, a long tail for late charges. So you can actually price a service higher if you're gonna charge a low late fee, or you can charge the service lower if you're gonna charge a high late fee. So it's kind of an interesting way of looking at that. Okay, so let's move on to the next topic, which is having the value conversation. And this is where the meat and potatoes of this is, because these are the actual words and the actual questions and the actual exchange of a conversation that you have with your existing client or your new client. And this is the type of things that allow you to discover that value. As I mentioned earlier, you will never ever know exactly how much your customer values something. You will never know it. It's always subjective. But you will get closer to that answer, closer and closer, as you ask these questions. As a matter of fact, on the previous session, that was an hour ago, on Ron Baker's session where he talks about pricing on purpose, I was monitoring the questions, and the number one question or the number one theme was, how do I know how much my customer is willing to pay for this? Or how do I know what the value is? Or how do I know what my customer's perception of value is? And the answer to that is, you don't know, you will never know. And I personally feel that as advanced I am in the value pricing transition, I personally feel that every single time I possibly left some money on the table. As a matter of fact, every time my customer says yes to something, I know that they probably would have paid $1 more. And the question is, maybe they would have paid $10 more, or maybe they would have paid $100 more. So I don't know. And when my client says no, then what I do know is, for whatever reason, I didn't present the value, or they don't value it. And at that point, I may have done the right thing, which is, stand firm by the value I wanted to provide. So when we talk about new clients particularly, you never offer an hourly pricing as an option. And by the way, I still have hourly fees in my repertoire, let's call it. But I don't start with the hourly fee, because if you give an hourly rate and then you give a fixed fee, your customers are going to start making calculations in their mind, and you may send them into the wrong direction, even because they'll be thinking and making calculations in their mind. So take hourly pricing completely off the table. Now, if you absolutely must give an hourly rate, make sure that it's so high that the anchoring effect of your hourly rate versus your fixed fee drives them towards the fixed fee. So I've had a client that I give him a fixed fee of like $12,000. It was a very long project, and for whatever reason, they just didn't get it. They're like, I don't get what I'm paying for. And I'm like, sure, you know what? I really want to work with you, and I think you want to work with me. Here's my fee, $350 an hour. And then the client sat down and went back and came back to me and said, okay, fine, I'll pay you the fixed fee. So it could help you having a really high hourly rate to anchor it. But generally speaking, you want to get it off the table, or not even discuss it, or right away get the client off that mindset. Now, I always charge for the initial interview. Always charge for the initial interview. Having the initial interview for free, it is the worst thing you can do for the valuation of your services. Because one of the great challenges to that is that right off the bat, the client got something for free. Now, if you're in a highly competed scenario where the client must meet you in order for them to even know and understand what you can do, you haven't done good enough marketing or good enough credibility work for the client to already know they want to work with you, you could do this, but I would tell you, I much prefer to meet with 2 potential clients that are paying upfront for the fee than 10 potential clients that are not paying upfront for the fee, because I find the ones that pay upfront are much easier to close, and you can actually take that credit and toward it towards the first month, or credit towards the complete project. Also, as you talk to this client, document as many details as possible. So even the little details, document these details, and the words that the clients use, the problems they have, the problems they had before, document them and try to use their words on your presentation. So when you go and give them the price, make sure you bring some of the wording that they use, the terms that they use, because that helps them connect with what you're offering. And it also lets them know the single most important thing that an advisor should let their clients know is that we listen and we understand. So again, you're going to use that as a catalyst for creating those service options. And sometimes we even use industry terms to name the options. So we'll talk about naming the options a little bit later on. So if you're working with a restaurant, you can call it one option, you can call it entree. Another option, you can call it, super size. And the third option, you can call it, full meal or a 5-course meal or something like that. So you can actually use the client's wording or the client's industry and the quirks of their own business and their brand to then create your options. So there's things that they're going to be able to connect with. And the recommendation is to always do 3 options. Now, some of the tips I'll give you for preparing for the value conversation is 1, do some research. See if they have a website. Notice what's the last time the website was updated. Customers actually really appreciate when you say, hey, I noticed your website was last updated 3 years ago. Has something changed in your service offering in the past 3 years? Clients absolutely love that. I mean, because it's like, not only you're noticing something really important, which is your website is potentially outdated, but you're also taking interest, is there a change from the moment I researched your website till now? Maybe you haven't gotten around to add new products and services into your website. So the other thing I like to do is I like to research the owner, the decision maker, or the person I'm dealing with. I like to check them out in social media. I like to see, are they posting things in social media, in LinkedIn, Facebook, Twitter, whatever. And one of the things I really watch out for, especially last year, or during the presidential election, some people tend to be very vocal about their political views. So if I see them saying something that's very passionate on the political side, then when I go into the meeting, I'll be very careful to mention something that could be conflictive. In some cases, I know some folks would feel the other way. Maybe they don't want to deal with a client that's in that polar edge of the political, opposition to their views. So what I'm saying is, research them and gather some information about that. And it's okay to befriend them, befriend them in Facebook and LinkedIn, whatever. People actually like that. I get to clients' offices and they say, hey, was it you who I accepted a request in LinkedIn yesterday? I say, yes. Oh, awesome. And in some cases, it's not you stalking. They can do reverse stalking, right? They'll connect with you and then they'll go into your profile and read a little bit more about you. And what's nice is if you have personal information there, like, I got 2 kids, I live here, I go to, I play golf on the weekends, whatever. What happens is when you're making that small talk, the clients get confirmations. So if somebody reads something about you, let's say you're a golfer, and then during the small talk, you say, hey, I'm a golfer. What happens is because they read it before and you said it again, you're actually a truth speaker because you confirm the truth. So that actually builds rapport a lot faster. I mean, that's the psychological effects of that, but that's just a quick note on that. Now, I don't charge for this first 10 to 15 minute phone call. So I'm okay with a free 10 minute phone call via web or over the phone, but that's just to discover and understand whether or not the client could be a right fit. But the actual value conversation that takes between an hour or 2, those absolutely I charge for, right? So you could have free consultations, quote unquote, on the discovery phone call just to understand whether or not we should be speaking, but then definitely charge for the actual value conversation or the meeting. Now, always send an agenda. So so they know you mean business and you know that you're there with a purpose. You're not there just to, make a new friend. You're there because you're purposeful. You're there to not just gain the business, but you're there to take advantage of that time. And what ends up happening is when you meet when your first impression of someone is someone that's diligent and that takes full advantage of the time, then all of a sudden, whether you work 1 or 2 hours on a client and charge higher than what they were expecting, they get that impression that you mean business and you're not there to waste any time. Things like resources pertaining to the industry. Even if you find an article that's interesting about whatever the bird food manufacturing industry, and you send it to them and say, hey, I read this a couple of weeks ago. This is relevant to you, and they like that a lot. Now, always give the client a short list of items before your meeting. I would say never go into a meeting without saying, have this, and that up front, because then you'll get there and you'll ask for a bank statement, a financial statement, a report, and then you can literally waste 20 minutes of them looking for this paperwork. And then even if you were there for the hour or 2 hours you promised you were, but the client wasted 30 minutes looking for a paper or making photocopies, they still perceive that you weren't there productive the entire time, and that can cause some consternation. So that would be a really important piece. And then Ron Baker's statement that he uses, which he credits to McKinsey & Company, the best way to start every single conversation about the price we're going to give is, Mr. Customer, we will only undertake this engagement if we can agree to our mutual satisfaction that the value we're creating is greater than the price we're charging you. Is that acceptable? The reason why that is so powerful is because you're saying that no matter how high you think the number is, right? I'm talking about the customer, how high the customer thinks the number is, your intention is that even though the number is higher than when they were thinking, your intention is that your value will be higher. Now, will every client buy from you? No. Is every client a good fit? No. But at least it doesn't cause that strain where they think you're just expensive for the sake of being expensive, which is never the case. You should never have that to be your client's perception. You're not expensive for the sake of being expensive. You price lower than the value you give, period. So your commitment, it's more on giving value than setting a price. So that's a really important piece. The other part that I really like is ask permissions to ask questions. You don't want to jump into questions right away, because if you do that, there's no explicit boundaries on the questions, and in some cases the customer may say, well, that I'm not ready to answer that. But if you start with something like, in order for me to provide the best possible service or the best assessment of what we can do for you, it is important that we meet or exceed every expectation you have about a relationship with a new accountant. I would like to ask you a set of questions that will allow me to understand not just how your business operates, but what are your expectations from us and what are your goals, whether it's long-term and long-term, so we can tailor our service to those needs. Is that okay? Now, that is a rhetorical question. Nobody's going to say, no, end the meeting now. They're going to say yes, but at least they open the door, which means you can ask some questions, deep probing questions that maybe you weren't, in normal circumstances, you would be scared to ask, and sometimes they're crucial to ask the first time. Now, another really important question I like to ask, and possibly the best one, is if you have an accounting question for us or a tax question, how quickly do you expect the answer? And our job sometimes is to do compliance work, but the other part of our job is to be there for our customers. And you will be there for your customers. You will answer your customer's question. The question is how and how quickly. So if they say, hey, you can email me within a week, that would already off the bat tell you how the client perceives or how urgent their questions are. But if they say something like, you must call me by the end of business day, then if you're okay with that, which by the way, I'm personally not, I never take a client that tells me that. Or if I really want the client for whatever reason, I price it so high that I may price myself out of it. I will never take an engagement where the client's first expectation is I must answer them within the same business day. Just because I know me, I know the way I work, I can't, right? Do you need this long memo with court cases, with examples, with tax code? Or are you okay with me just calling you and giving you more or less an answer? So those are important conversations to have right off the bat. The other one that I like to ask possibly in the first three questions is how important, now don't say is it important, because they're always going to say yes. The question is how important is it that we guarantee a result and give you 100% money back, no questions asked, if you're not happy. Now, if the client says, in my experiences, that's complicated, to me, that's not that important. But the ones that say, yes, it is absolutely imperative that you guarantee a result, at that point you say, what are those results? And you bring the cat out of the bag right off the bat, right? So it's a really important piece. Now, the other one is, and this question you don't need to ask if it's being answered naturally, but you can ask something like, do you want a specific list of narrowly defined items, sets of services that we're going to provide, saying we're going to do this, not this, do this, not that? Or are you looking for something broad and dynamic, and if it looks and smells like I should be involved, you want me to get involved, and just do it, right? So if they say something like that, if they say, yes, that's very important to me, or if they say that's somewhat important to me, to have this broad and dynamic scope, you're going to save that for the third most expensive option. Remember, you're writing all these things down, you're gathering this knowledge. Some of the other questions I like to ask, and I love this one, is what are the things that we can do or forget to do that would be an absolute deal breaker for our relationship? Think about this. What are the things that we can do or forget to do that are absolute deal breakers for our relationship? Now, in some cases, they will say something like, if my employees know how much I get paid, that would be a huge problem for me, right? Or if my partner A, B, or C, ask you to take sides, in some discussion about how we should handle something, and you take their side, that could be a deal breaker for me. I mean, I've had so many interesting answers here that this actually sometimes it's their own deal breaker for whether or not you want to move forward with the client. Because you can use this to say, hey, by the way, when you told me this was an absolute deal breaker, this is something that we don't do. Or something like, if your client says, if you challenge me on whether or not I made an expenditure or not. I mean, there's so many, this question is so awesomely broad that you can get so many interesting answers from here. So I would definitely say, keep that question as open as possible, and allow the customer to answer in whatever way, shape, or form they feel at the moment. Now, another question like, how do you define a successful relationship with your accountant? Another question you can ask, hey, just so I know, let's fantasize for a second. If price wasn't an issue, what would be the ideal role that I would have in your organization? What would be the ideal sets of responsibilities and availability I would have? Not that I want to do it, but I would love to know what that future looks like, because obviously we would love to be able to get there once your business is successful enough to do it. So that will give you some information about the future, where they're going, what their long-term expectations are. Other questions you can ask is, hey, how much budget you have allocated to business growth? Another one is, do you want us to help you set up your business where you can take a vacation and disconnect without feeling all this anxiety? Is that important to you, or is that something that I should be concerned about? Making sure that I help your business move towards that direction. Things like, let's talk about your actual process. What does your purchase process look like? What does your sales process look like? How do you manage documents? How important is it backup documents to you? What is the best way we can learn about how your business works? Ask that question and let your client tell you, well, I would love for you to talk to Betsy and go to the warehouse and ask her all these questions. I would love for you to go to our second location and talk to John and do this. And then once they start telling you this, they're telling you that they're truly interested in you working with them beyond just the accounting or the compliance. Another question that I like to ask broadly is, what does your cash flow look like? Or how do you think we can help you improve it? Like, never ask, are you good with cash flow? Are you having cash flow problems? Because that's a rhetorical question. You want to say, what does the cash flow process look like? Again, the goal of this conversation is that we're asking questions and they're answering, and we're not giving any answers or any solutions or any suggestions. We're just gathering answers. A question I love to ask is, if we could take things off your plate, if there's something I could wave a magic wand, take it off your plate, and that will free you up to do something that matters most, what would those things be? And the other side of the coin is, if I was to give you 2 hours back, fantasize about giving you 2 hours back a day, or 1 hour back a day, or 5 hours back a week, whatever it happens to be. If we can fantasize for a second, what if the day had an extra hour, or a week had an extra 5 hours, whatever? What would you be doing in working on your business? What would you be developing, and that sort of thing? So I love those questions. And just a couple of more examples is, is your business on track for an exit strategy? So is your business on track to be sold or to be succeeded? Are there other partners? Is there a buy-sell agreement? Are there sons and daughters ready to take over the business, siblings, whatever? Is your business attractive enough for external investors? Is it bankable? Would banks give you a well-priced market rate loan if they were to look at your financial statements? And if what you're looking for is to get there, is this something? Are you looking for an accountant that will help you get there? And does your business produce enough funds to fund enough profit to fund your retirement plan? So that link that's on the slide takes you to my questionnaire that contains some of these questions, and this is actually the actual questionnaire I use for clients. I guarantee you that if you go on that link and you download that, and it's in Word, so you can modify with it whichever way, shape, or form, I guarantee you will get some value from there. So after you're done speaking to the client and you go back to your office, then figure out how I'm gonna price this for my client. These are the questions that now you need to write down answers for. This is a successful value conversation. Then it's going to allow you to write these things down. So one of it is, how much value are they gonna derive from working with me or with our firm? Did I understand their business? Can I solve their problem? Can I solve some of the problems that they answered that maybe they weren't looking for an answer for, but we did no matter what? So how much value can they derive from that? What would be the cost of us not getting involved? Like what would it cost them to go with another firm or not to go with us, right? So write that down, or try to extrapolate that. What is the reason the client is considering us? Like why do they want to switch providers? Like why do they want to go through that hassle? And why are they even considering us to be the receiving end of that provider switch? How much have they paid in the past? That's really valuable, right? Really, really valuable if they paid much less in the past from what you're going to charge now. But if it's less, you need to have asked or understood what didn't they get before that they're going to get now, because that's going to be specifically how you're going to present the service. And also, what is the economic benefit deriving from our service? Are they going to be able to make more money? Are we going to be able to advise them on saving in expenditures, that sort of thing? So let's move on to developing and presenting options. Now we got about 10 minutes left. And this is really where, okay, now we take all this knowledge and all this information, all these questions, and then we create a presentation with it, pretty much. So let's take a look at a basic example. So we interviewed the client, we gathered all this information, we kind of gauge what's important to them, what's not important to them, what's high priority and what's not high priority. And then we looked at the scope of work, and then we determined, and just assuming that, we determined that we are willing, the smallest dollar amount that we as an accounting firm are willing to go into this client with in order to perform the basic accounting tasks, right? Reconciling the bank accounts, cash basis financial statements, whatever it is, right? It's $250. So you're gonna start with that number and you're gonna make that your baseline. Now you're not gonna present that option. That option, you're not even ready to present that option. That's just your core number. Now we're gonna add on to that, without changing the scope, we're gonna add on to that our options. So for example, let's talk about timing, right? During the conversation, we ask the client by when they need the work, how important is it that they get it done the first week, second week, third week, and we determine more or less what would be, how much we're willing to charge to give the client more priority to do it on the second week or the first week of the month. And you write it down. You're like, well, if I do it by the 21st, I won't add a premium. If I do it by the 15th, I'll add $25. If I do it by the 7th, I'll add $100. Why? Because the client said, it is very important to me to have my stuff by the Friday of the following week of the month closing, whatever it happens to be. So if the client made a big deal about that, make sure that that big deal is translated into a big premium. Let's look at a different example, talent. Let's say the client was more or less okay with, options, and you say, look, if we speak once a month for about an hour on the phone, that will be included on my core service. But if you want to speak to me twice, mid-month and then at the end of the month, I will add $100 premium to that. Or if you want to have unlimited access to me via phone during business hours, with a 24-hour response time or 48-hour response time, plus a physical on-site 2-hour meeting to discuss the books and strategy, I'm going to add a $250 premium to that. Terms, let's say for the client agreed to pay with an automatic credit card before the month starts, then I won't add a premium to that. But if the client says, no, I want you to send me a bill and I want to pay at the end of the month, we will add a $50 premium to that. But we'll also add that we will continue the work upon non-payment for up to 2 months and charge $50 per month late fee if we continue to do so. And then we'll add a premium to that option. And then for the clients that say, you know what, I want you to give me 30-day terms, and also I want you to be flexible. Hey, if I ever run into a situation where I can't pay you, maybe give me a month forbearance and allow me to pay without penalty. Worst case scenario, half the times they don't ask for this stuff up front, but it's a nice fuzzy feeling. We'll add a $200 premium to that. So taking that into consideration, then we grab our good, better, best option and we add up across the line, what is the price premium for a good option? When we add up all the betters and we add up all the best, we come up with the price. Now we still don't know whether the client values it enough. We still don't know whether they are willing to pay $800, $475, or $250. But once you present those 3 options and you present them progressively, you start getting an understanding for what they value or not. Especially when they move towards option B or option C based on one particular feature, you start understanding what they value. And that's okay. You can get this wrong and you can go back to the drawing board and change it. But once you set it, you don't change the number, you only change the options. So the first one is just to give you an overall idea and give them names. Like I'll give the first one Express Bookkeeping Service. The second one I called it Bookkeeping Plus with Mint Month. Or the third one I call it Strategic Bookkeeping, whatever name you want to give it. And then you present it in a table, long form, right? So I only gave an example of 4 options, but there's 7 options, right? So I give an example of 4 options, or you can even go deeper, and you present it in a table like this, and this will really, really help you make the presentation. Like this will really, really help you talk about it and give the client a choice. They look at the dollar value, they look at the features. It allows them to move back and forth the options to understand which way they go. And there's no specific spread. Like the difference between 1 and 2 doesn't have to be double, doesn't have to be 20%. There's no set in stone science to this. But you can nudge someone to one option by making them pretty close to each other. So for example, if the difference between first option and second option is very small, and there's a huge gap with the third option, they may go with the middle option because there was a small difference in change. But if the small option, let's say, is $250, and the middle option is, let's say, $700, and the most expensive option is $800, well, they may be nudged into the most expensive option because the difference is very little. So you can actually modify their perspective on this whole thing just with their spreads. But there's no science on the spreads. You can do whatever makes sense. So if you download the worksheet that's on the slides, that's actually a PDF file that I have where I have all the options and the core services. Sometimes that sheet is not enough, by the way, but I use that so I can write down, and this gives me an idea of how I'm going to design it. I always, codify it into a Word document or a proposal or something like that, but at least this gives me a way for me to, and it's a graphical way for me to know, okay, what feature or what service I'm going to add on each side, right? So this gives me really good starting point per se. So download that page. That will actually really help you. So in summary, so I think we're gonna run one more polling question. So let me run one more polling question, if you don't mind. So we'll run one more polling question, and we got 5 minutes. I'm gonna summarize it and give you kind of the last minute insights on that, and then we'll talk about the resources and wrap it up. So there's the third polling question. So somebody says the $250 basic core service, is that the same for all companies? Is that for a small company or a big custom company? So Susan, that $250 was just an example for that specific client. The basic core option is not the same for all clients. It essentially could be different. So you can have a different core, this is what Ron Baker calls the walk away price. Like, this is the bare minimum that I'm willing to charge to do the bare minimum that they need. So the 250 is not a number for you to use in any way, shape, or form. It's going to be different every single time. Another question is, what do you think about a fourth option? So yeah, Mark Wickersham, he likes to talk about the fourth option, and I believe a fourth option confuses people. So I like having a fourth option hidden. So it's okay to have, a hidden fourth option. If for whatever reason the client it jumped to the third option right away, like you notice that the client didn't budge too much and it went straight for the highest option, and it wasn't a difficult sales scenario to move them to the third most expensive option, that means that you're leaving money on the table. So if you want to have that secret fourth option that gives them a little bit more, just because the client says, you start noticing, hey, by the way, during a conversation, you mentioned one thing that you said it wasn't a big deal, but you said that you really want me to train your spouse along the way while you're doing this. You want me to spend, but you said it wasn't that important, but if you could do it, great. Well, let me give you that fourth option, which includes, 1 hour of training of your spouse, whatever it happens to be. So you can have that fourth hidden option there. If the client it's jumping really quickly to that third option, and you're feeling that you're leaving money on the table, that's always useful to have. But I would never present 4 options up front. I find more options. I just find 4 options to just be confusing. So I absolutely think that you have to have that fourth option hidden. And by the way, that fourth option could also work on the low side. So if you really want the client and you don't want to lose it because your bare minimum is too high, and at the end, the conversation ends up being that they really want to work with you and they want something really basic, you can also have that fourth option hidden on the low side, right? So that's possible. But I normally don't want to lower. Once I give the lowest amount, I don't like to go any lower. So what do all small business clients want? This is what I learned from my 10 years of experience with this, and reading Ron Baker and Kirk Bowman and Mark Wickersham and all the value pricing guys. And my experience is, well, number one is people want certainty on pricing. We are small business clients in a lot of cases. Ourselves, we're small businesses, and we purchase things and purchase services from providers. We want clarity. We want to know what we're going to pay for something. We don't want a surprise bill ever. The other thing that people want is they want confidence. They want confidence. In most cases, they don't really know whether it's accurate or not. They just want confidence that it's accurate. And if you give confidence of that, whether it's accurate or not, or as accurate as possible with all the restrictions that the client gives you, if you give them confidence that the books and the reports are accurate and complete, they value that a lot because they use that as a support mechanism for making decisions. And they want peace of mind. They want the whole proverbial audit proof. If an audit comes in, it's audit proof. Penalties come in, I'm not going to pay them because everything's on time, or we're going to be able to abate them, or penalties will be a non-issue. All small business clients want trust. They want trust. Even though most of them are untrustworthy of so many things, they want to be there. People like to have trust. I mean, think about how you feel when you're around someone that you trust and they tell you something and you don't have to second question it whether or not they have an agenda or an intention. Like being with someone that you trust, it just gives you so much comfort. So they want to work with someone that they trust, and they also want to They want to trust their team. Even though they need to be careful that the team could steal from them, that their employees could commit fraud, they want to trust that either because their team is trustworthy or because their accountant is there to catch these anomalies and detect potential issues. So it's really, really important that people build that trust in you and their team. And if you are the catalyst for helping them trust their team, that is huge, highly valuable. All small business clients want to enjoy the fruits of their labor. Everyone wants to take a vacation. All of my small business clients, that's what they struggle with at the beginning. They don't take vacations. They can't take vacations. And when they do, they're working during their vacations. I mean, it happens to me when I go on vacation. So when a service provider gives them the gift of a worry-free vacation, that's extremely valuable. And you need to be able to detect that up front, because if you can provide that, you can charge really, really well for that. And most importantly, they want their business and their brand to increase value over time so they can sell the business or they can retire worry-free that the business will produce enough for the rest of their years. So last piece is on the resources section of the slides. I have some value pricing notes. It's about a 30-page document where I write some of these things and a couple of extra things that we don't have a chance to go through in 1 hour presentation. So definitely check that document. The new client intake form, which I discussed, is right there on that resources slide. The options worksheet, in which I kind of write down all my options, and a few other pre-recorded webinars that I speak on the topic, a little bit longer, a little bit more extensive. Then because we only had 1 hour and I had to cover a whole bunch of stuff in 1 hour. So hopefully I did okay with that. I'm going to be at QuickBooks Connect. I am going to teach a YouTube class in QuickBooks Connect. Very exciting to show my fellow accountants how I do my YouTube marketing. And definitely join us at QuickBooks Connect. If you can travel to San Jose, if it's your first time, if you've never been there, your mind will absolutely be blown in terms of how advanced the classes are and how great the conference is as a whole. So as I mentioned at first, if for whatever reason I couldn't answer your question, email me. I'm usually pretty good at answering those questions, hector@garciacpa.com. And it's right on top of the hour. And I really appreciate you being in this session, and you have a wonderful day.